Today's market call is presented by Robinhood. Elevate your trading with Robinhood Legend, the sleek, free, customizable desktop platform built for active traders. While there is no cost to use the Legend platform, there are other fees associated with your brokerage account. See the Robinhood Financial Fee Schedule for more information. A rare Friday market call, 10 a.m. on the East Coast. A warming East Coast, but cold nonetheless. Guy Adami, Nathan, how are you?
I'm doing great, Guy. I'm a little warmer day over day. Yesterday was it was frigid, as they say. So here we are. We're in the 20s. That sounds like a bit of a reprieve here. Like you said, a rare Friday edition of the market call. We're gonna use the heck out of that Legend today. I'm really enjoying it. I think we've been using it for about a couple months since they launched it. We're going to detail a couple option trades. We're going to look back on one from last week. Amanda has a pretty interesting diagram, Guy. You haven't seen it on the chart. That's going to be a fun one that maybe we'll do each week, depending upon how different trades go. We had some interesting earnings this week. I think next week is the big one. What are you focused on?
Well, let's look at it because Amanda made a nice little graphic, a little slide. So slide it, Earl. And it is an extraordinarily busy week for a lot of different reasons. A little Fed speak, but a bevy of earnings, and I look across this thing, obviously Tuesday sort of sticks out to me in terms of GM. I mean, it's fascinating to see some of the moves in that stock, but Lockheed Martin, I know everyone's going to be focused on Starbucks, but quickly, if Amanda could throw up a Lockheed Martin chart, just so to see what happened. I mean, this thing into October of last year was a rocket ship to the upside, seemingly unstoppable. Then, obviously, the election came around. Then we heard some talk about Doge and getting rid of some waste. And I think Lockheed Martin went from north of $600 a share-ish, and it cascaded all the way down to about $460. So that was a pretty precipitous drop. So it's going to be interesting to see, Dan, if they can sort of stem the tide on that front.
Yeah, this is a good example, though, Guy, of a stock where you would have said 2 weeks ago, it is way oversold, got to a technical level, from back in the summer in July, maybe it's going to find some support there. Well, it did, you know what I mean? And it had a rally, I want to say, from what was it? 460 something to over 500, maybe 515. And now in front of an event, you say to yourself, okay, like this is a more difficult setup than it was going to be. Let's pull up Boeing for a second here, because this is one that we detailed a call calendar. This was a few weeks back, isolating that 180 level. And look where it went. Now, intraday, it went to 180. Intraday, this is interesting because they pre-announced Guy last night, and we were looking at that result after the close at Fast Money, and the stock was down a few percent. Again, expectations weren't high about the results, but look at this one. Look how this stock rallied, right? And we kind of got this one right pretty much near those lows a few months ago. So if you look at the stock like this, the stock ran, the news comes out, it was bad as expected. The stock was down in the aftermarket, and here it is. It's up on the day.
I think this is actually very encouraging. And, the charge they took was on the back of the work stoppage. So I think to a certain extent that was a known. The sell-off in the aftermarket yesterday was interesting, but obviously, it didn't give back what it gained during the day. And the fact that it's higher today, I think, is really encouraging. So if Amanda were to sort of scroll out a little bit and take a look at where this thing is and where it's been, and I'll say it again, I think Boeing's going to be one of the stories here in 2025 that catches people off guard. Not that by any stretch of the imagination that they fix things, but, this one can sort of levitate with really just the absence of bad news. And, I think in terms of the headline risk, you got a lot of it out of the way last night. So I look at Boeing here, say, good price action on bad news, that typically augurs well going forward. And it's one that I think you got to continue to watch and try to play from the long side, whether it's being long outright stock or being long vis-a-vis options, Dan.
Yeah, let's see how it trades on the next piece of bad news, because I'm not sure where that good news comes from. We've heard stuff about orders and the like here, that have basically getting incrementally better. And I think that's why the stock went from, 140 to 180. And so let's see how long it can hang up in and around here, because, that next piece of news, it's either on its way back to kind of 190, 195. I think there's 10% upside downside risk in this thing in the
Fair
near
enough.
term. That's my
Mhm.
my 2 cents. You mentioned before we get to some more of the earnings, the Fed meeting, highly anticipated Wednesday, 2 o'clock, CME Fed funds tracker basically saying near 100% probability. There's no move and rates. You and I have been talking about it a little bit. Newly elected or newly officed President Trump yesterday, I think, putting more pressure on the Fed to lower interest rates. That's clearly not going to happen. But, Fed Chair Powell guy is going to get bombarded with questions at the press conference, I think starting 2:30 or something like that. It's every other word is going to be Trump, 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 right? So how do you think markets take that? Because if Amanda wants to throw the SPX chart up, the last huge bout of volatility we had was December 18th around that Fed day. If you want to even tighten it up a little bit and go 6 months on this thing, we had that huge down day, which you and I had been, tracking a little bit. Getting above that was going to be some sort of important technical and sentiment standpoint. That was a huge down day on really big volume. It took 2 or 3 trading days to reverse, but we made a new low, coming into this year. So talk to me about what you're expecting, and will the market pay attention to all these questions about the jawboning from Trump?
Yeah, it's going to be fascinating to hear the line of questioning and his response to said questions. And again, I want to emphasize this. It's nothing I'm about to say is political at all, but the Fed actually cut rates in September. I think we all understand that. And they control the front end of the curve. I think most people should understand that. What they don't control is everything else. And, again, I said it on Fast Money last night. I'll say it here. Jerome Powell could come out in the next 5 minutes and say, you know what, President Trump and I had a conversation. He's 100% right. We're going to lower interest rates by 50 basis points. And again, that'll impact the front end. My instincts suggest the 10-year yields will actually go higher on the back of that. So, you can control what you can't control, and everything else is sort of at the response of the broader market. And I think that's what we're seeing here. So he can wish for lower interest rates. The Fed has been cutting interest rates, but it doesn't mean the rates that he needs to go lower will, which is a longer conversation. But I think that's what the market is seemingly grappling with here. So with all that said, your point about the question he's going to field next week, I think it's worth the price of admission just to see how he handles it.
Yeah, no doubt. Let's leave the SPY there for a second. You see that move, guy. It's a pretty healthy move. You see that spike bottom. Let's maybe Amanda can isolate that little bit, because we love that trade or that technical pattern there. This is going back 2 weeks. So the low that we had. And so if you look at, it's hard with, you see that with the volume, right? So you had that big down day. It broke almost below that range, closed near the low, if I want to get that exact date. Then it opened lower and closed on the high. You see that green bar right where she is. And then you basically opened the high, you closed in the middle part of the range, but then you had that gap, right? And so if you want to just go to that green gap, and then we just kept on going. I love spike bottom patterns, especially on high volume, right? So you see that isolated there. Now let's kind of bring it back out to like a 6 month. And it shows you that sort of, it was almost like a coiled spring in a way, right? People got way too bearish. They kept on selling. And then all of a sudden something turns on that spike day. And then you get the sort of follow through. Next week, I think it's just kind of worth noting, and if Amanda will let me drive here a little bit, I just want to pull up the options chain, because we are often looking at this. So let's go to next Friday expiration. The ETF and the SPY is trading at 220, 229-ish. So let's look at the at the money call weekly, expires next Friday. Costs you about 243, and then you have 249 for the put. That is the at the money straddle, the call premium plus the put premium. If I want to figure out essentially the implied movement between now and next Friday's expiration, I take the straddle price, which is about 490. I look at this kind of this is IWM. I'm sorry here, people. Let's do this again. I had the wrong one up here. So this is, let's go look at January 31st. So that's next Friday, right? That wasn't particularly helpful here. So if I want to try to figure out what the implied movement is in the SPY between now and next Friday's close, we know that Wednesday meeting is going to be the big driver, but we also have a lot of big earnings on Thursday afternoon, and some of the big earnings are from some of the largest market cap companies, that we have in the S&P 500, right? So if I want to figure out the implied movement, I go to the at the money straddle. That's the call premium plus the put premium. Here we are, we're about 610, let's call it, right? So I'm going to go to that 610 strike. I'm going to look at the call premium, it's about 418. I'm going to look at the put premium, it's about $4. That's about $8, let's call it, if we're rounding, right? So I would take that $8 in premium and I would divide by the strike price, which is 610, and that gets you to about 1.3%. That's a 1.3% move in either direction. If you wanted to buy that volatility, let's just say you did not have a strong indication whether the ETF was going higher or lower. If you paid about $8 for that at the money straddle and the 610 is the strike, you would need a rally above 618 by Friday's close, or you'd need a decline below 602. So again, the strike less the premium to the upside or downside, that's the implied movement. Now, the flip side of that is if you are convicted, if you like the market's going up, it just broke out to a new high. I think whatever the Fed has to say, it's going to be dovish. I think the earnings are going to be good. I think the S&P is going to establish a new range above these prior highs. If you pay $4 for that at the money call, then you have a break even at 614, right? So the strike plus the premium. So that's how you'd play, directional. There's also a way to play it from a vol standpoint. But again, this is a binary trade if you're buying the at the money put or the at the money call.
And to the other side of that equation, if you think regardless of what they say the market's going lower, I mean, you could eliminate the call and buy the put. And it's basically the same trade in reverse. And but it is interesting to your point, 1.3% move by next week, given that vol's been sort of pushed down and obviously with all the things that are coming next week, I think that's actually a really cheap way to play what I think is going to be a pretty volatile week. So it makes a lot of sense. Now, if you want to say, you know what, Guy, I think the market's skyrocketing higher to your earlier point, Dan, then you eliminate the put and buy the call. If you think conversely, you know what, look at the move we've had, it's going to be very hard to build on this, then you eliminate the call and buy the put. Or to your earlier point, the earlier trade, if you don't really have a view, but you think it's going to be volatile, then you just play it for the vol trade. So I think it's really interesting. And that's why, first of all, that's why this platform is so helpful, because you can visually see it. And that's why we talk about these things, because, you can make a directional bet or you can just make a vol bet, Dan.
Yeah. And one of the things, I know you track this pretty closely, but I just pulled up the VIX here and, you can see this thing below 15, right? And so the last time it was at these levels, we had, a heck of a spike in vol, and that obviously corresponded with that down move and in and around that spike bottom. So again, the VIX is not much of in my opinion, of a forward indicator. Obviously you have to look at the curve from a future standpoint, but again, every time we've gotten down towards this 15 level or below it, it has definitely set up for a bit of volatility. So let's go back to that earnings slide, Guy, and we can maybe, you kind of hit the Lockheed. And by the way, we're going to be back obviously all week next week. On Market Call at 1:00 again, Monday through Thursday. And we're going to kind of hit a bunch of these names, Guy, day by day. Thoughts on like a Starbucks, new CEO? We saw that big gap. China is kind of an issue.
Yeah.
Inflationary pressures are a bit of an issue. What are the expectations here on the Starbucks?
Well, that's the thing. I mean, I think expectations are really low. And you have a stock that's trading around 98 or so, but you've also had a stock that's had a little bit of a decent run since that August move. I think it traded down about 72.5, 73. So here you've had a stock that's sort of gotten back on its horse. The problem, of course, in my opinion, you're still in a pretty significant downtrend longer term. If you go back all the way, Dan, to the summer of 2021, if Amanda or you can look at that high, I mean, you have a significant downtrend line in this stock. The first point being the summer of 2021. The next point probably being, I don't know, if you really want to get down to brass tacks, the spring of 23. And then this recent high we saw in November of last year around 102. And, that downtrend is very much intact. So there you go. I'm hard pressed to believe, we're going to take this out. Now, if we do, you know what? Maybe you play for the breakout. I think this thing sort of stalls here. I think valuation is a problem. And I think we've already had sort of the bounce on some excitement around the new management team.
Yeah, no doubt. And the sell-off, if Amanda wants to just kind of isolate this on a shorter term basis, maybe a 1 year, you had that gap on the new CEO, right? You had that consolidation, and then you had that sell-off, which was pretty violent. I thought there was a good chance that maybe it filled in the entire gap. That would have been so bearish, but it might have set up for a kind of oversold rally with any news. Let's look back a little bit. The big headline that I saw in tech this week was the Stargate announcement. This was next to Donald Trump in the White House. It was Larry Ellison, who is the founder, the chairman, former CEO of Oracle. I think his title now, guy, is CTO, Chief Technology Officer. The CEO, Sam Altman of OpenAI, which is obviously one of the hottest names in the generative AI space. They are the ones that made that Chat GPT in late 2022 when they put out that I think it was 3.0. I know you were all over that 3.0, and now here you
I
are.
love but I've been waiting, as you know, for the 4 and the 5.
But guy, we joke about this. I think in 10 years, I think a lot of folks, they're already doing it. They're going to look back and remember that moment. It's going to be like when Steve Jobs walked out and introduced the iPhone. I mean that in 2007 when he did. I know you got no time for any of it. I get it. But this is a seminal company with a seminal product. Who knows if they go the way of the dodo, because they're competing with the likes of Microsoft and Google and Amazon and now Anthropic and stuff. But again, here nor there. So you had Sam Altman, OpenAI, you had Larry Ellison of Oracle, and then you had Masa Son of SoftBank, right? And so the idea is that they're all going to commit hundreds of billions of dollars to build out AI infrastructure here in the US. And for Oracle, this is kind of a boon. And I'll tell you why. Because Microsoft is the one who had been investing in OpenAI. They basically, part of that investment is $13 billion over the last couple of deals, that OpenAI was going to use their server, their infrastructure to train their models. And so supposedly, and I've been reading this almost every day in the information, which is a great tech rag, that, that relationship's been continually strained because they have not had OpenAI the access to Microsoft Compute that they wanted to. So the idea that Oracle might pick up the slack, Oracle is like a B, maybe C player right now in that sort of space, but Oracle ripped. And so I'd love to get your take. Then we'll go to the charts. Then we'll go to the trade, because I'm very skeptical of this announcement. It seems very political, and let's see how much capital is committed incremental to what all these companies were already going to spend on this build out.
Yeah, it's interesting. You're skeptical, but somebody that was basically not in the room at the time, but somebody that obviously has an office now in the White House, was also skeptical, and that comes in the form of Elon Musk. And it's going to be interesting to see how that all plays out, because one has to wonder how that relationship is going to evolve over the next few months. With all that said, I mean, there should be a level of skepticism around it. Not that it won't happen, but there's a long runway for all this to get done, and the enthusiasm. The market, again, you talk about pull forward. Well, that's effectively what the market did with some of these moves. They're pulling forward all these headlines and jamming it into a stock price over the course of 24 hours. And then you have to figure out, okay, where do we go from here? So that obviously created opportunity for those few days. I think it also creates opportunity sort of on the back end as this news starts to wane and the news cycle continues on to other things.
Yeah. And so to your point, I think you didn't name him by name, but it was Elon Musk, right? And so Elon Musk is building XAI, which is a competitor to OpenAI. Elon Musk was one of the founders of OpenAI. And to say that Sam Altman and Elon Musk don't like each other is a bit of an understatement. So the idea that he tweets out almost immediately or a couple hours later, they don't have the money. Okay. So this was hundreds of billions of dollars. Now, just to look at Oracle, this is a $600 billion market cap company. They have nearly $90 billion in debt, okay? And then they only have $11 billion in cash. It's kind of impossible for them to commit an incremental $100 billion, right? And so I think that's part of what what Elon's saying. And also, OpenAI, they've raised $25 billion in the last couple of years. So they don't really have it. Maybe SoftBank, that's why they're there. But so let's just pull up, the Oracle chart for a second. And Amanda, if you want to let me draw, well, there's the uptrend. You see that 150-day moving average, guy. You see, since it bounced on the Stargate news, right? It just basically went up 20% in a straight line. It's kind of consolidating up here. Give me your quick take on the technicals, I think the uptrend in the 150 are easy to see. You see the prior high. The
Mhm.
prior high was an all-time high. The prior high was the day of their last earnings announcement. It reversed into the close and then a huge gap lower, and then it continued to go lower on big volume. I mean,
Well,
that's about as
that's the
horrible
story.
setup.
See,
Yeah.
that to me is what the interesting part of the story is. And you're looking at somebody here that's liked Oracle for quite some time. If you do a longer term chart, one of the things I thought about Oracle a few years ago was, old tech that's sort of getting into this new world. Valuation was reasonable, forgotten, left sort of on the side of the road. And I think people were starting to figure it out. And that's effectively what's happened. Now, the problem is, in my opinion, it went from being a very reasonable stock in terms of valuation to a stock that you can't make that same argument for. So that's the longer term chart. Now, if you want to go back to that prior chart we were looking at, this trajectory that we saw lower on the back of that news made a lot of sense. I guess to a certain extent, the fact that we traded down to an uptrend line was a good thing. We have basically traded down to the moving average as well. But personally, I think what's happened here is we're just getting some late enthusiasm on a story that's intact, but I think stretched in terms of valuation. So, I think, in my opinion, I think this rally is going to be somewhat short lived.
Yeah, I agree. So let's look and see how we play this with options. And this is one of the names where I think because you had such a strong, short-term move based on a piece of news, I think ultimately when the news flow kind of abates, and then also over the next week or so, we're going to get a lot of news from their competitors, right? As it relates to their own capex, for cloud infrastructure build. And I think if we were to see some very pointed comments towards this sort of, announcement, I think Oracle comes in, Guy. We talked about it on Fast Money the night that the news was coming out, and we're saying to ourselves, okay, Oracle's having really strong, AI infrastructure growth off a very, very low base. I think, it was 2.5 billion in that last quarter, which was up 50% year over year, but it's meant to decelerate in this current quarter. So I think you play for a pullback here. I think you probably see this thing trending back towards that uptrend line, right? And if you see that, it's bringing you up like, $155, maybe $160 there. So I think that could play out over the next 5 or 6 weeks. So here's the trade that I'm looking at. Okay. So with the stock trading around 185, I want to look at a put calendar. We did one of these in Boeing and it worked out really well. It happened to be the same strike, 180. But what am I doing in a calendar trade? I'm trying to take advantage of some short-term volatility that might come out, or hopefully it will bleed out over the course of that short period of time. And I'm looking to finance the purchase of a longer dated option. So in this case, we're going to look at a put calendar. I'm going to look at the Jan 31, that's next Friday's expiration, versus the Feb 180. So I'd be selling the Jan 31. I'd be buying the Feb 180. It cost me about 170. So I'm selling the Jan 31 180 put around 150, and I'm buying to open one of the February regular way expiration. What does regular way mean? The third Friday of every month, 180 put for 320. So it costs me 170. That is my max risk. Let me go, if Amanda will let me kind of drive here a little bit. I'm just going to show you on this on the legend how I will build this trade. So you see these expirations on the left. You want to be really careful that you're looking at the proper dates, right? So this one is Jan 31. That's next Friday. I'm looking right in the middle. You see where the stock is trading, 185. You see my cursor there. I'm going to look down at the 180 put. Now, obviously, we priced this up, I don't know, 30 minutes ago. So the prices will fluctuate, as they say. And now I'm going to go to the February 21st expiration, and I'm going to look to buy that 180 put, right? So I'm selling the Jan 31 180. I'm buying that. So that cost me about 180 here as I price it up. So what do I want to happen here? Let me go back to the chart. I want to basically have this stock move down towards 180, right? And then what I want to do is have it expire, okay, on Jan 31 next Friday, at 180, above that 180 strike. However it is, if it's above 180, the Jan 31 expires worthless, and that has helped finance that longer dated Feb 180 put. And then at that point, depending upon where the stock is, I could sell a lower strike put and create a put spread, further reducing the cost of this, the spread. But I like this because going back to what I expect to hear over the next few weeks from some of their competitors as it relates to CapEx and how they are positioning themselves with some of these other big model trainers, if you will. Does that make some sense, Guy?
Well, I mean, it makes sense to me. And basically what you're saying is over the course of the next week, you've taken in that premium. The hope is, to your earlier point, that the stock basically does nothing, maybe just sort of, I don't know, gravitates a little bit lower, stays above 180. You earn that premium. So that obviously offsets the cost of the 180 put in February. And now you're playing a directional bet that the stock is going to be lower as the month of February progresses, and then you're going to earn out theoretically on the 180 put in February that you own, that theoretically, if the stock goes down, the value of the put is going to go up, and then it gives you some optionality. So what you're saying is, you know what? I have an ability to sort of take half of the cost away, playing that the stock is going to be sideways to slightly low over the next week-ish, and then it starts going to accelerate to the downside as the month of February kicks in. We hear some earnings from some of the competitors, and maybe then gravity takes over. So I think it's a really interestingly constructed trade, and to me, it makes a lot of sense. And look, I mean, is there a risk involved? I guess a little bit, but not ridiculously so.
Yeah, that 170 in premium that you're paying is basically, you can do the math. It's a little less than 1% of the stock price, and you have a lot of optionality here. And, the worst case scenario between now and next Friday is that you have a monster move, either upside or downside, and then a lot of that premium would go away. But I think that we're probably okay above 180 between now and the end of the week. Now, one of the things, though, I think could put a monkey wrench in this is going back to the price action that we saw, after the December 18th Fed meeting, is that if you have a monster move in the market, let's just say we had a 2-3% move lower in the S&P and the NASDAQ. I mean, you do 2-3% on an Oracle, and you're getting there. And I would expect an Oracle to outperform the move of the S&P. Does that make some sense to you?
No, I mean, there are obviously always sort of external factors that could throw a monkey wrench in things without question. I think you're right to bring up the Fed meeting, and it's caused volatility before, but to the other point, it might, Oracle might not fall victim like some of these other high flyers will. So, I think you're taking advantage of that headline that we just talked about, the bounce in the stock, which I think was excessive, the potential for a sideways to slightly lower move over the next week, and then a subsequent move back down to that trend line and or the 150-day moving average over the next few weeks into February. And it just makes a lot of sense to me, given what I think is going on.
Yeah. Another name that we were looking at on the board that looked, I guess, kind of interesting to you and me. You're a bit more of an industrials guy. I'm a bit more of the, the newfangled stocks, maybe we call them the internet stocks. You remember that guy? Old economy, new economy. You pointed out GM, and you highlighted some price action after its last earnings. You've been talking about GM versus Ford, I feel like, for a long time, as just this is the name you want to own in the U.S. auto space. That circle that we have there, Guy, that breakout of that range was after their earnings that they reported back in October. And you see there was a little bit of a check back, and Carter loves that kind of move. After a big break, you check back a little bit, and then you kind of get that spring, and we got back to new 52-week highs. Talk to me a little bit about this pattern, because it seems like, a couple trading days before earnings, we're right back at a level that seems technically important.
Yeah, I think so. It's interesting. GM, the move back down was textbook, right down to the 150-day. We checked back, and now we're right here. Now you have to sort of make a bet. I mean, I think to your earlier point, if you want to be in U.S. autos, GM is the place to be. If you want to pull this chart out a little longer term, if you can, this is a static chart. If we go to a longer term chart, you see what that move we saw in the fall created, and then the subsequent move down, I guess, made sense. The question you have to ask yourself is, do we stall here? Was that a bit of a blow off top, or is there some, you have some more giddy up to the upside? I think the fact that we traded up to those levels we saw basically in late 21, early 22 is a little bit problematic, but maybe we did enough maybe we did enough damage to the downside. And the fact that we held is somewhat encouraging. But if you're asking me, which you clearly are, I think you're sort of in no man's land right here. So I'm more in the wait and see thing, because if you get that next move higher, I don't think it's going to stop. I think you're going to go visit those levels we saw a few years ago.
Yeah, I want to talk about this through the lens of the options market here a little bit. If Amanda will throw up the implied volatility chart, implied volatility is basically the price of options, and you'll see the way they have moved. You see those spikes, that's before earnings events, right? And so this is a name that actually has been volatile in the market over the last couple of years. We showed that longer term chart. You see a lot of very big movements. So as you get in front of earnings moves, right, for a stock that, oddly has a lot of expected movement on their earnings, you see the spike in implied volatility, right? So that's basically what folks are willing to pay for options, and basically where dealers are, willing to sell them. And so what do you see after an earnings event? Well, you see the vol come in, right? The news is out, the stock has moved, that sort of thing. So here we are. We spent a bunch of time over the last 2 weeks at this very high implied volatility level near 40. So a near certainty is that the vol is going to come in. If nothing happens in the stock, it's going to get destroyed, right? The implied volatility on a short-term basis. And right now, as I'm looking at this, if Amanda will let me drive here for a second, go back to the legend. Let me go to the options chain, right? We already know by now how to figure out the implied move, but I want to look at Jan 31. This is in the GM on next Friday's expiration. Stocks around 54. You're basically paying 187 for the call at the money, or 187 for the at the money put. So it's about 3.5% of the price. Again, that goes back to, you want to buy, you want to get long, you want to get short exposure. Like, that's what you'd be doing on a very short-term basis. But when I think about that, it seems kind of heavy there, Guy, right?
Mm-hmm.
So let's just say, though, I was looking to play to the upside, because that 54 level, you get above there, it's probably on its way to, 57, 58 or something like that. Who knows if it'll do it in one fell swoop? It did it last quarter, but past performance is not indicative of future performance here. If I were looking to take advantage of that high implied volatility, and let's just say I thought the stock was going to kind of move up or down a few percent, go sideways, or move up a lot, let's just say I did not expect severe downside, I might look to sell a near the money put spread, right?
Mm-hmm.
And if I'm selling a near the money put spread, the stock's at 54-ish. Maybe I want to look at the 52. I could sell that in Jan 31 expiration, and maybe buy like the 50, right? So I'm selling the 52, I'm buying the 50, I'm defining my risk to the spread, to the width of the spread, less the premium that I'm taking in, right? So if I'm selling this thing, let's just call it at 52 cents, my risk is 148 if the stock is below that long strike, which would be 50, right? So I'm basically risking 150 to make 50. There's a high probability that I'm going to make that 50 cents, or a portion of it. There's a lower probability that I'm going to lose all 150. And if we want to go to the 50 strike in Jan 31, I could look at the delta here, and the delta is about 17.5. So the options market is saying there's about a 17.5% chance that the 50 strike put is going to be in the money. I like that risk reward,
Mm-hmm.
but then it comes down to two things. Obviously, three things. Timing is really important, right? It comes down to basically sizing of the trade, because you could look at this and say, well, 47 cents, that's not a lot, but depending upon how you've sized it, right, that's really important. And then we're just doing some simple math here about probabilities and the like. So I kind of like this trade. If you're bullish, the opposite would be true if you're bearish. But again, this is a short-term trade. Short-term trades around events, they tend to be a little binary too. You get the direction wrong, or you get something wrong, and you're gonna be out all your money.
3-to-1 risk reward makes sense. You're taking advantage of heightened vol in the name, makes sense, and you're playing a little stock market here. So, when you have moves like this in individual names and their underlying vol, I mean, if you have a directional view, this is how you portray it. I mean, this is how you put it into effect. So again, you don't have to agree with us here, but we're just trying to point out, how in individual names you could take advantage of, again, vol that is spiked, or in some cases, vol that's too cheap.
Yeah. So, Guy, I'm looking around at just some of the names that are moving a lot today. Let's pull up TXN. That'd be the Texas Instruments, and we talked about a little bit after the close last night. They reported earnings. They talked about some of their end markets, industrials, autos, that sort of thing. Wasn't particularly great. The commentary wasn't particularly great. Consumer electronics, they didn't have so many great things to say. Let's look at a 1-year chart really quickly. I think you and I talked about this again on the show last night. it's just range bound. You know what I mean? Like, it seems like investors, they're not thinking of this as the sort of semiconductor name that's going to get too much benefit, right, from this generative AI boom. And I'm just looking around and I see Broadcom, the AVGO, that's up, 2% today. In general, the SOX is basically, it's down a little bit at 1% or so. Thoughts on a name like this? What do you glean from a company like this that, again, it's not closely tied to the things that's moving in the SOX, but I'm just curious, like, how you take this sort of news?
Well, it's a beneficiary of money flows into ETFs, into semi ETFs that Texas Instruments is in. It's that rising tide lifts all boats. And that's been, Texans win to that. The problem is they're not in businesses right now that are doing as well as some of these other semiconductor names. As you mentioned, Broadcom, I think that's pretty clear. And valuation doesn't make a lot of sense to me. So, yeah. I mean, I'm not saying you go out and sell with both hands, but to me, there's nothing compelling at this valuation about this company, given some of the commentary that we heard last night. And I've thought that, by the way, for a while, sometimes correctly, sometimes incorrectly. Right now, it's looking like it's correctly.
Yeah. Last thing, I know we got to get out of here. We appreciate everyone being here, with us on a Friday and kind of readjusting their schedules. I know you guys are used to 1 o'clock. Let's pull up a name that we know and love. It's called Apple Computer, Guy. AAPL. That's how it comes out. And there's a couple really interesting lines here. If Amanda wants to pull it up. And, we've talked a lot about WWDC. That's their developers conference they had on June 10th. Look at all those lines. She's going to blow those things out. Let's get rid of those lines. Okay. And the stock had this crazy 2-day move. Investors got really excited about what they announced. We don't have to go through it or whatever. You and I were very skeptical about what they announced. We didn't think anything was really going to come through this year to cause an upgrade cycle. Okay. Let's draw a horizontal line from June 11th all the way to where we are right now. Okay. So why is that day important? Well, the stock had gained, what did it gain in like 2 days? This was the largest market cap company in the world. And on no real specific news, like nothing you could kind of put your finger on. This was just investors kind of loading up. So 220 was the level where it topped out. Now let's go higher to the second day. I want to go just where you had it before. 220. Okay. You see, that was been support. That's where it bounced off of, late last year and had that huge move. So we've given it all back. We're below that 150-day moving average. The company reports next week. This is one we're obviously going to address again. But man, that is some sort of ride the stock's been on for the last 2 months. Thoughts here as we get into the big earnings week next week?
Well, they report on Thursday of next week. I think it's Thursday, number one. Number two, I mean, it's had a pretty significant, very quietly. I mean, what is about a 14% move from this all-time high that we saw seemingly a few weeks or so ago. To your other point, we're at pretty big support level. The fact that we bounced up and closed a little bit of a gap that was created on that move lower a few days ago is not necessarily a good thing. Feels like, you back out August 5th, which a lot of things cascaded lower. Yep. So let's just forget that for a second. I've thought for a while that, a round trip to that June day, that 10th was 193, I think was the close. Yep. I mean, to me, that makes a lot of sense. I'm not saying it's to do it on the back of earnings next week, but it's certainly trading as if something is wrong. I mean, the last couple of weeks, on a broader market that's obviously making all-time highs, Apple has not particularly performed well. I mean, that goes without saying. So critical support, I think 193 is in the crosshairs.
All right. One last thing, Amanda, if you can get rid of that support line, and let's back this out for 2 years, this chart. And Guy, I'd love to get this as the last thing we'll hit here. So the stock has not been a huge mover on earnings over the last couple of years. But if you want to isolate, see the low in May that we had, and you see that gap, that was the May of 2024, right? Yeah, right there. Okay. If you look at that, that was one of the last gaps over the last year and a half, Guy, that we had higher. And look at that. So the stock has not been a huge mover. If I asked you, what do you think the implied move is on this stock heading into the print on Thursday? And we've already talked about it. GM has a 7% implied move, and Amazon's going to have an 8. That's right. What do you get? I'm not trying to pin you. I'm just saying, what would you?
I think it's 3.5%. I have no idea.
Well, you're Nostradamus. Okay. Like, let's just be clear on that. It's about 4%. Okay. Yeah. And you'd say to yourself, that's kind of light. Now you gravitated there because you sit on the desk, 4 times a year when the earnings are coming out, and the stock's generally not a huge mover. So there was one big move over the last 6 quarters, and that was that one last May. But what's interesting about that one last May, look at how depressed the stock was, right? Expectations were really low. We also found out that for the better part of the year until that point, Warren Buffett was selling half of his position. He was sitting on this thing. So one of the reasons why, if you look at that technical setup on that June 10th day where it went up 10% in a straight line, it was like the Buffett was finally done selling. Expectations were still really low. The technical setup was beautiful, right? Like it all came together. But now the fundamentals really take over. The stock's expensive. The China's a real problem. Apple Intelligence, their AI thing is really a year out, like to be a meaningful upgrade thing. Another thing that you and I have highlighted, if you go to the Apple application store right now, and I know you spend a lot of time there.
Well, it's cold out, so it's warm in the stores.
But if you go and try to put TikTok in there, you cannot download that application. Okay. And so if you are a teenager and you are addicted to TikTok and your iPhone is ready to be upgraded, and it can't be downloaded in the store, you're going to have to pull those old iPhones out of these teenagers' cold dead hands. It's just not happening, right? So that could be.
I mean, a lot of people don't remember that. Nice job.
What's that?
That was Charlton Heston that said that.
Yeah.
Not about Apple, but
Yeah. Yeah. Was it in? It was an
NRA meeting.
Oh yeah, that too. Oh yeah, that was not one of his. It was a performance, but not
No, it was an actual meeting. It wasn't. He wasn't in a film. I mean, he said that at one of their meetings. I mean, that's a great pull by me. By the way,
there's no shortage of his movies going back to the '60s that you could have looked at his performance and say, "Oh yeah, that's how he's going to be in the '80s about like guns and stuff like that." Do you agree with me a little bit? He kind of
Soylent Green. I mean, Soylent Green, one of the great movies of all time, with the aforementioned Charlton Heston. But he was also in, I think, one of the airport movies where he played, somebody. I want to say he was the engineer or the physicist behind the plane, and he had to go save Karen Black, if you recall. I mean, I can go deep with you.
You know what's funny?
Obviously, Planet of the Apes. I mean, come on.
Yeah, this
guy, Ben-Hur.
Ben-Hur. I mean, literally, he should win a Lifetime Achievement Award for overacting in almost every one of his movies. Let's be clear. It's funny that you mentioned the airport one, because in the '60s, in the '70s, they had Towering Inferno.
Sure.
They had the
Earthquake,
Fighting Adventure. They had Earthquake. They had it was all about like these natural disasters.
But see, not that anybody cares about this, but I used to go to drive-in movies as a youth. And when Earthquake and the Towering Inferno came out, they sort of had it as a double feature, and they called it, wait for it, Shake and Bake.
I love that. You know what Shake and Bake is obviously also
from Talladega Nights, but this was the way they sort of put it. This is come see this double feature: Towering Inferno, Earthquake, Shake and Bake. Back to you.
Yeah. Just one last thing. All right. So with Apple, we cover that. We're going to hit it next week. I just thought it was really interesting. You and I, it's 10 years ago, we did a couple shows out in San Francisco, Fast Money shows, and you and I are checking into a hotel and we're looking up. There's a huge atrium. Remember that?
Yeah.
And we're looking around. And I think it was you said to me, you ever see Towering Inferno? It was with what's his
Paul
name?
Newman was in Towering Inferno. O.J. Simpson was in. I mean, Fred Astaire, Steve McQueen.
Yeah. So we're looking up, and I was like, you're like, this is the hotel that they used for that, which is pretty fascinating. The other thing I'll just say is all of those movies. Why was it that it was like Battle of the Network Stars? Like, the same thing for Poseidon Adventure. They literally had it just seemed like cameo after cameo. Right?
Gene Hackman was in Poseidon Adventure. Shelley Winters, Ernest Borgnine. I think Roddy McDowell of the aforementioned Planet of the Apes fame. I mean, it's amazing to
go on and on. All right. Well,
Red Buttons, I think, was in that. I mean,
on another show, we'll get into all the double features that Guy used to go see when movies cost like a dime at the drive.
That's what we did as kids. I don't have to tell you.
All right, we covered a lot of ground here, Guy. It's a Friday. Who knows? The week is really next week's the main event. Let's be clear. You and I are going to be down in Miami for the iConnections Global Alternatives. We're going to be doing market call from down there Monday, Tuesday, Wednesday. We'll be back in the studio on Thursday. We're going to do fast money down there. Tuesday and Wednesday, which is pretty cool here. So we're kind of geeked up, as Guy would say, about next week in South Beach, Florida.
We are. And this is, I have no idea how the day is going to play out, but obviously I would key, if you're looking for pretty critical levels of a close, 6,075-ish. If we were to close there today, and that's obviously about 40 handles or so away, but in today's world, anything can happen. That's pretty interesting to watch. So we'll come back to that on Monday, I'm sure, but I just want to throw that number out before we leave here, Dan.
Yeah. Last thing also, if you're watching this on Friday, Guy and I spoke with Mike Wilson. He is the chief equity strategist at Morgan Stanley, CIO of many portfolios in their asset management group. He is a great friend of ours. He's been coming on the Tape podcast, I want to say, for years. I think you said 8 times, Guy, over the last few years, which is amazing. So Mike lays out his outlook for 2025, some of the things that, he got right, got wrong in 2024. We had a great conversation. So go check that out in the podcast store, follow it, rate it, review it, share it with friends. That's how people find the show, Guy.
Appreciate your time, folks. Enjoy the rest of the day. Enjoy your weekend. Enjoy NFL championship weekend. Enjoy the fact that the Rangers have gotten themselves back in the playoff hunt. Enjoy the fact that for the first time in almost 50 years, 5-0, 2 Knicks will be in the starting All-Star game. Not that I give a shit about the NBA All-Star game, but that is impressive. What else can you enjoy? Maybe the warm-up here on the East Coast. There are a lot of things to enjoy, but we'll be back on Monday.
See you guys. Thanks.